Hey guys, Landy here. Hello and welcome to Landy's Crypto Corner. Today is March 13th, 2023, and we have fulfilled the downside targets as I laid out in the other short update video that I put out. At that 19,000 and 19,500 was the area that I was looking, and we spiked down to around that 19,550, 570 here on spot. That is target fulfilled, as I stated. We did close the next daily candle on a 3-bar reversal structure here at the 200 SMA with those original spikes down to the third standard deviations. Typically, we don't see closures below or above the third standard deviation, as I pointed out in the last video, unless we're coming off of a very tight compression on the Bollinger Bands. We then subsequently had all three of my upside targets were fulfilled and then some. And in this case, the first upside target was the lower first standard deviation to the 200 EMA here. At 200 EMA was around 21,750 or so, and the lower first standard deviation was coming in right around 21,500. And we got a closure above the 200. That's what I wanted to see on the daily to go test the next high, which was coming in right around the 20 SMA there at 22,650 or so. We got that test, and then subsequently we got my third and final move up that I was looking for on a bounce, and then a little extra there. At the time, it was the upper first standard deviation at 24,000 to 24,100 or so. And we did fulfill that. In fact, we spiked all the way up to 24,710. And, so what we're going to discuss here is, some Hopium upside targets on price, and then some potential pullback areas and where things could land on a pullback, and then where things kind of get a little dicey for price, maybe heading back further to the downside to retest lower again. In this case, on the daily, any closures above 23,840 or so, that would be the upper first standard deviation here. And I would be targeting up to that second standard deviation here at the $25,000 area, 25,020. If we do see intraday price action head up any further, we can look to around where that third standard deviation is to the upside at 26,200. But as I go through some of the higher time frames, you'll see that 26 and $25,000 to $26,000 area is going to be kind of what I'm looking at as the upper limit for a little bit if things do get continuation to the upside here. And I'll show you why in just a moment here. But first off, it would be the Bollinger Band spread right now. Bollinger Bands are very spread out because of the nice compression that we had, this nice little pinch in the Bollinger Bands back here. We spiked the bottom side. We spike back up towards the top side here, catching the wicks at the third standard deviation to the downside, and then the upside, and then mean reversion back to the basis, and then a nice move down to the third standard deviation on the downside here. After getting the closure below the first standard deviation, the lower first standard deviation here, then subsequently getting a closure on the second standard deviation, and then below it spiking into the third. We got the 3-candle reversal, and then right back onto the upside, closing above that first standard deviation. So because the Bollinger Bands are fairly spread out right now and volatility is very high, I don't think that we're breaking out to like $28,000 to $30,000 right away. In fact, I do think it's more likely that we see a move to around that $25,000 area, maybe higher up to around 26,200, maybe even a spike above it. But I'm not really looking for too much more to the upside or even the downside back to the lows. I'm not looking for like a trending move outside of that before some consolidation and a bit of a volatility cool down on the Bollinger Bands here. As denoted by BBWP, we are still expanding those Bollinger Bands. We got the expansion initially on the move below the first standard deviation here into the second standard deviation. We got that aggressive expansion of the Bollinger Bands to the downside, and we've maintained that high volatility environment by bouncing off of that in between lower second and third standard deviation there, and then bouncing all the way back up. So that tells me that, I don't think things are going to go too much higher in the immediate time frames on the daily, without some consolidation and or a bit of mean reversion. So what would I be looking for continuation to the top side here? Well, I'd be looking around the highs, around that 25,000 to 25,000, 300 to 400 area, in between the second and third standard deviations. Maybe an intraday spike up on one of these dailies into that third standard deviation to the upside, around that 26,200, maybe a little bit higher, especially if we get daily closures continuing above that first standard deviation. We could see the expansion of those Bollinger Bands continue to the upside, which would give a little bit deeper targets on that third standard deviation area of the Bollinger Bands. But I really wouldn't be looking too far outside of those unless we just kind of float sideways and up. And or we get a nice mean reversion play back below the first standard deviation. And this is where if we are going to be looking for pullback targets, they're going to happen on any closures below that 23,840 area, and we get a closure below there. I'd be looking for structurally, kind of where things are falling here, around the 23,650 high here on an open and close, 23,500 if you like. Somewhere in there from a structural support and resistance point of view, all the way down to around that 22,660 area, coming in right around this high here, which again, that's supported. That's a support area structurally on a horizontal, as well as where our 9 and 21 EMAs are coming in here, along with the 20 SMA, so the basis of the Bollinger Bands. Anywhere back below the 200, we'll run those lows. I really am not looking too much further than that, $19,000 to 19,500, where we do see that third standard deviation coming in. Excuse me. All right, so as we kind of go through a little bit more here, we could see that the stochastic, and this is just a regular stoch. This is running, crypto optimized settings. It's a 6.3 on the KD reads. The momentum pivot is not important. I have it. This is a paid indicator. I did not create this one. This is from the gentleman, Eric Crown, over at Crown's Crypto Cave, or crowntrading.net. He's got a bunch of developers, caretakers, one of them, big fan of his free indicators and his paid. This is by KVDB. I do not have any association with them. I don't get paid. I don't have any referral links or anything like that. I just like their developers. I like the stuff that they're doing over here. 19,900. So basically back around the open and the close open down here on the low is the momentum pivot. So, this does support that, stoch pointing up, still got some room to go to the upside here on a 6.3 read. You can just throw a regular stoch on there, and it's the same thing. When you see it pivot, it's going to support the move to the upside. We already know that because, we have a structure break. We had this downtrending structure here on the daily that's been going since, the lower high being put in, confirmed here on the 3rd of March. So we had 10 days of a downtrend. And then we have a trend break, basically. That's denoted by the label up here. We've got a trend break to the upside. That's just the 9 popping back up over the 200. We saw the trend break to the downside after the 9 EMA popped below the 200 here. We got the red diamond with the yellow label down, just denoting that the trend was shifting and or to be on the lookout for a new trend to form. And we did not see that follow through with the 21 dropping below there, which would have started to print red diamonds. We can see that when the 9 exponential popped above the 200 EMA over here, we got the green diamond and the yellow label up. And then subsequently, when the 21 popped up above the 200 EMA, we saw green diamonds printing, denoting that we were in an uptrend. And that has to maintain the uptrend. We now went into a bit of a transition on the daily, and we have not yet resumed that uptrend, as the 9 has not closed up over the 21 EMA just yet. They're just right on top of each other and right on top of the 20 simple. So that does tell me that I'm not immediately looking for some of those deeper targets I'm now starting to see pop up on social media, 28 to 30, 30 to 32, 32 to 34. I've seen 48. I've seen crazy stuff. I've seen, bull markets back on, all this other stuff. That's not, I don't think any of that matters. What matters is what's going on right in front of you in your chart. So in this case, I do think there is limited upside potential still left in the tank here, as denoted by what's going on with Stoke, what's going on with volatility. And as long as we see closures above 23,850 or so on the daily, I still do believe that we will see a move to around that 25,000, maybe deeper into the mid 25s, and possibly even up into 26,000, 26,250 or so, where that third standard deviation on the daily is coming in. Now, we did just close a 2-day as well, and you can see that one of the other reasons why I'm a little apprehensive to start calling for some of these deeper targets is we have both the 200 EMA and the 200 SMA bracketing the second standard deviation to the upside. And we don't often see Bollinger Bands this spread out where we start closing above the second standard deviations or even spiking into the third. And if we do, it's usually, a 2-day and below rejection initially. Doesn't mean that it's, a death sentence or anything like that, but it's usually rejection. You see even on this moderate spread on the Bollinger Bands, when we started to go to the downside here, closures below the second standard deviations just yielded wicks into the lower third standard deviation. The only time you really see, just like on the daily, on a 2-day here, where we're getting closures above that third standard deviation is coming off of a very compressed set of Bollinger Bands, which means there's low volatility as denoted by the BBWP. So in this case, the 200 EMA and SMA are coming in there at 25,355 and 25,668 respectively, with the second standard deviation coming right in there in the middle there at 25,525. So I could easily see a swing of the local highs, a pullback from there, and then we kind of see where things land. And in this case, below the first standard deviation, I do think we're in for a bit of mean reversion on the 2-day down to around $23,000. That's actually the area that needs to hold, especially when looking at the 2-day chart. When that area was lost, we've just been kind of going sideways between like 23,200 to 22,900 on the 2-day basis band here, which is just the 20 SMA. That does tell me that that area is important. If we see price lose it on the daily or 2-day around that $23,000 on a closure, then we're probably looking lower again, back down to around 21,750, 21,800 on the lower first standard deviation, all the way down to the bottom side of the range again, right down there. In this case, third standard deviation is coming in at 19,250 or so. I still think the downside risk is 19,000 to 19,500. Just like I said in a few videos back, that's where I was looking for the downside move to come in and at least get a nice bounce, and then we kind of gauge from there. Well, we got the nice bounce, and now we're back near the highs. So I don't think we're breaking out to brand new highs just yet. We might put in a higher high on the daily 2-day time frame, but I'm not looking for like brand new highs, at least right now. We need to see how this week develops and how the week closes out specifically. So the 2-day also does have an upside angled Stoke here coming out of the bearish control zone here on the next closure. If it can maintain closures above the pivot point, which is 21,000, we'll call it 100 because it's probably going to work its way up there anyway. Again, the pivot number is not really important. You see things fall apart below $23,000, probably going to head down to that 21.8 or so anyway. So that is going to be generally the pullback targets that I'd be looking for. Really need to see things remain above $23,000. For those of you in the Discord, you guys know that pretty darn well. I've been talking about that for a while. as being a key area. The 3-day also back up above, and I noted this in my more long form video, not the update video that was about 10 minutes long. More long form video, I did think that the downside risk was going to be the second to third standard deviations here on the 3-day, and we saw that play out pretty much to a T. Came in, wicked the third standard deviation about 19,500. Closed, went sideways, gave another try down, but we saw that the second standard deviation was rising and all the way down there to the third standard deviation because we had this nice uptrending basis band. And what's now happening on the 3 days, we're starting to see a little bit of compression on the Bollinger Bands. We might see this re-expand because the compression is lagging a bit because we went sideways for a pretty long time. And now we'd be looking for a re-expansion on the 3-day. If we do see that happen, that's going to happen on a 3-day closure above 25,340. That's where we're going to see the more aggressive expansion to the upside. Otherwise, it's just trending above the first standard deviation. It just kind of floats up there, which is fine. I mean, that's what you want to see. Is price just kind of sideways and up as we're transitioning out of a very bearish trend into possibly a bullish trend. And in this case, we have a consolidation trend. We have, higher highs, higher low, higher high. Now we have a lower low. If it can put in a higher high, this was the deviation, and we'd be looking higher. Where would we be looking? 25,333 to around 26.5. And that's kind of what we're talking about on the daily as well. So we're seeing the wider set of Bollinger Bands, high volatility there. So not really looking too far outside of that daily third standard deviation unless price can really grind up against the top side of the Bollinger Bands, second standard deviation and above. In this case, on the 3-day, we see the 200 EMAs coming in around 27,183. And we see that we have an initial cross up on Stoke. So we need to see the next 3-day closure close, above basically the basis bands in this case, which is 22,975. There's that $23,000 pivot area again. And we're looking at 23. Actually, it's a little bit more aggressive needed to complete this cross to the upside for the momentum shift on the 3-day Stoke. And that would be 23,250 or so. I would say that any closure above $23,000 is going to do it. Why? Because the low is set and Stoke chases. So I would say above $23,000, we are still looking up and to the right. And in this case, around the $25,000 area, around the highs, 25,250, 400, 500 area or so. And the 5-day closing with the next 3-day is kind of giving us that bias of the top side coming in around 26,500 or so on the upper end. And that is basically combining what we're seeing on the daily, which we can get wicks outside of that third standard deviation. We often don't see Bollinger Bands this expanded where we get closures, but we could see wicks outside of it. That's where we could be looking at like a 26.5 area or target to get hit, at least in the daily time frames, as that is right around where the 5-day is coming in at 26,530. We've got the 200 EMA on the 5-day coming in there at $27,000. And then if you look up to the third standard deviation to the top side there, that's coming in just shy of 30,000 at 29,500. And the gap on CME is $28,000 to $30,000. So it would make sense if we did see wicks up in that area over time. I don't think it's happening immediately. I still think that 26.5, kind of the upper end of what Bitcoin's capable of right now, at least on the daily, until we see kind of where the next 3-day, 5-day closes, and then subsequently the weekly, because the weekly has a lot of overhead resistance coming in right around $25,500 and then 26,500 yet again on the weekly second standard deviation to the upside. Now, want to be very clear. You look at the weekly, the first standard deviation to the upside here is 23,136. I do think on the daily, we can go lower. We can go all the way down to the 22,600 area, but you want to see closures on these longer term time frames, your 2-day, 3-day, 5-day, weekly, coming in above that $23,000 or so to preserve some of the chance for Bitcoin to get continuation further to the upside. In this case, we're looking at 26,256 on the weekly upper second standard deviation. Of course, that would also be above where the 200s are coming in. That's the 200 EMA and the 200 SMA here coming in right around 25,000 and a half. So we're getting a lot of confluences where the second standard deviations coming in to where the current highs are around 25 to 25 and a half as a very key area that's probably going to get a first pass rejection. And because we just saw a break of the downtrend, so we had our downtrending structure, now we have our trend break, you got to see a pullback to get some higher lows anyway. So I don't think this thing's just going to immediately God candle its way up to like $28,000 to $30,000. It could happen, it could develop, and we'll keep monitoring that. But basically, anything closing on the daily above 26, 650 or so, looking pretty good. You do want to see closures above 23,850 or 840, I should say, above that daily first standard deviation to still preserve another shot up a little bit higher here to around that 25 to possibly all the way up to 26,200. I personally am going to be looking around 25 to 25 and a half. There's a lot of technical overhead resistance there. And if we do happen to see, 22,650 or 660 fall apart, the 20 simple on the daily, I'd be looking back down to the 200 EMA at 21.8, all the way back down to the 200 SMA and another run of the lows. And we just got a big range here. Bollinger Bands are nice and spread out and volatility is very high. So, that's going to get some beautiful wider range trades, but I would not be looking for an immediate breakout, right now, or an immediate breakdown, obviously, because we're just coming off a nice, massive move to the upside. So that is going to do it for my analysis here on Bitcoin. And what I will say is we might be preparing, before I actually wrap this up, we might be preparing for a bit of consolidation and then a move back down to around 23,000, 22.8, possibly 22 and a half, where the 200s are coming in on the 4 hour. We have the 9 EMA coming right above the upper first standard deviation. Again, that's coming at 23,140. That is also where the weekly first standard deviation is to the upside. So, be on the lookout for a possible mean reversion play down there, but Bitcoin can just kind of go sideways while these EMAs and the first standard deviation catches up to price action. We could see it pop up. Again, third standard deviation coming in there on the top side on the 4 hour here at 26,200 with the second standard deviation kind of creeping its way up there right now at 24,675. And we did have that spike to 24,700. So, this is going to continue to trend up. And again, we can see price action, really can rip to the downside and the upside. But to favor more upside, you want to see closures above around that $23,000. And we might be in for a mean reversion play. It's not ready yet, but once BBWP starts to cool down and we start to see Stoke turn to the downside, that's when mean reversion is probably going to be in play. We can see that on the hourly as well. Stoke is flying high, not yet turned down, but we do see BBWP cooling down. We're looking 23.5 on the low end here of the upper half of the Bollinger Bands here, where the 20 simples coming in, all the way down to the lower first standard deviation if it's going to maintain trend. And go figure, it's coming in right now just shy of 22,600 at 22,595. That's going to float up as well, as if price hangs out above the 20 simple basis band there. See the 9s over the 21, the 21s over the 20. So we got a good stack going. 200s EMA is over the SMA. So we got a full stack, at least on the hourly. That would tell me that 22,600 area, 22,650, where the daily basis band is, where the where the lower highs are coming in as a good area of support. Excuse me. Yeah, so we're looking around the 23.5 area to around that 22.5 to 22,600 area. Those would be my pullback targets. If it's going to remain bullish and to the upside, it's probably going to land around there and then bounce heavily from there. If it's going to get continuation, we're going to see a move back up to around 25,000 or deeper to run those highs to that 26,200 to possibly 26.5 on the upper end there. So that's where I stand on Bitcoin right now. I do want to say if you're interested in testing out these Bollinger Bands and the other features of this indicator, it is a custom-built indicator by myself that's based on a triple Bollinger Band strategy. I run my own strategy on this. I will make this available in the link in the description below the video. It is a private indicator. I'm going to add beta to the title. It's it's kind of a mess on the input side and the style side as I sort through things. But it's got a bunch of different features like band fills. It's got a super trend built in. You can turn on and off labels. It's got my trend indicators for when the EMAs are trending above or below the 200. It's got EMAs built in. You can turn them on and off. And then, of course, it's got all the basis band stuff and the upper and lower first, second, and third standard deviations. So I will put that in the link in the description down below. You're more than welcome to what you have to do, because you can't search for it through the indicators tab or section here. You have to favorite it there, and then it will show up in your favorites list as it is a private indicator, and I'm still developing it. And I'm going to suggest that until you see my strategy video, which I'm still working on, which is my personal strategy for how I use this, I will tell you that you need BBWP. So to get BBWP, just type BBWP into your indicators tab. I got a bunch of stuff. I got my coffee cup I'm nearly knocking over here. Sorry. BBWP is Bollinger Band with percentile. It's made by the Caretaker. This is a free and open source indicator that he created to solve a few problems with Bollinger Band percent and Bollinger Band width specifically, and the lookbacks and all the calculations you would need to do to gauge volatility over a set period of time. And he created an indicator to solve that problem, and he did a fantastic job. This needs to be paired with those Bollinger Bands with the what I'm calling tentatively, the name's going to change, but I'm calling them Landy Bands with Trend Checker. So I will include that my personal indicator there in the link in the description. You're free to use it, download it. Give me feedback either in the comments on YouTube or on the indicators page. Feel free to give me, feedback or things that you would like to see added to it. That's perfectly fine. And I'm going to be iterating and working on this indicator for a while. So I am looking for feedback on it anyway. And there is some issues with it that I'm working out currently. So just know that it's not exactly optimized to my standard just yet. And I will let you know when it is fully ready and publicly released. It's probably not going to release under that name, as it is just triple Bollinger Bands with some bells and whistles, let's say. But if you found any of this helpful, please like and subscribe, and go ahead and share it with others if you did find it helpful and you think that they might benefit from some of the information that I'm sharing here. And I want to wish you a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, stay safe no matter where you are in the world, as it's getting crazy out there. And with all of that being said, I say thank you yet again, and Landy out.